We're going to do a brief video on Docusign Stock, DOCU Stock News, and we've got a daily chart up here of Docusign for you. It's got a 5-day in green, a 20-day moving average in red, and a 200-day moving average in blue. Let's go back here to right around November of 2021, the late November, and we'll see where the stock price violated it to come off its highs and violated this 200-day moving average. We got a bump up here from support, and then we broke through and entered a bear market with a huge drop from 231 down to 155. I mean, that's an enormous drop there, and a huge gap we're talking about there. It's incredible, and that formally started this bear market in the stock back in roughly December of 2021. You can see at that point we've regained its normalcy and just continued to sell off, somewhat respected the 20-day moving average, and put another gap in here down at this bottom right around the March 2022, spring of 2022 level, and rallied up from that low, came up. We're not really at this point respecting the 20-day anymore, where the stock is kind of trending flat. What's happened here is this stock is way too far away from the 200-day moving average, and as you can see, the market doesn't know what to do. People don't know what to do. Is the stock going to continue to be sold down? They don't know, because there's no indicators that let them know. So what happens in a situation like this, we move sideways towards the 200-day moving average, and you can see that's exactly what happened. Here was a massive correction, but then we go into a period of uncertainty, and from about this blow off bottom down here of March all the way through even to today, you could technically say it, we're still in this period of uncertainty. What we're doing is working towards over here at the end of the October level to try to get to a 200-day moving average, and then you'll test it. So what we're seeing, let's move forward to today. What we're seeing is this price it's hard to see because of the indicators, but this price is gapped from a high of about 58 to today a high of about 66. So we're up about an $8 gap. Not really a gap, but an $8 move, and with some gap in there of looks like a gap of about $3 or $4. So this price is trying to come off its recently made bottoms here. Looks like it put bottom in about $53 roughly, and so now it's gapping up. The issue with this stock is your 200-day moving average is at 99. Stock today is trading at about the high of about 66. That's an extremely large move for this stock to make in a short period of time, and I'm just all for entertainment purposes, only my opinion. I don't think it's going to be able to get there. I see a more reasonable target of the stock in the high 70s, and then a sell-off, maybe even the low 70s, and then a sell-off back down probably into the 50s. So again, this is all for entertainment purposes, only all my opinion, but I don't see this stock charging up to the $100 level to test the 200-day moving average right now. It's too soon. So a rally up to, as I say, into the 70s is possible, but in order to see that, we need to get the 20-day underneath the stock. The 5-day has to get above the 20-day moving average, and then we can charge up here to the low 70s and see what's going on. If that doesn't happen, I suspect that this rally will stop here. It's probably as it runs into resistance in the low 70 mark, and or maybe not even get there, and then turn around and fall back down into the 60s. So the point is, this stock is technically not in a position to rally, and it needs to get some support to continue a rally. But in any event, I don't see this stock getting up to the 90 level until the end of September. So what I'm saying is it's a little early for this stock to make a charge up towards the 200-day moving average, and I don't think it's going to be able to get there right now. Do I think it could get there by the end of September? Yeah, definitely. And by the end of September, it could get as high as, say, 82-ish, 83-ish. But again, it's going to have to fill across, come up a little bit, and technically look better than it looks right this second. So again, my best guess for entertainment purposes only right now, you may get some moves up into the 70s, but you're going to have to get support under the 20 days, going to have to get under the price. The 5 days going to have to get above the 20 to get your price up there. It's not that far. It's not that big of a difference. You're talking about less than $10 for an initial $74 target. So I think it's doable. But to get back out of this bear market, which is where it's in right now, if you look at this right now, we're firmly below the 200-day, and it's a bear market with a lot of distance between the price, $35 between the price and the 200-day moving average. That's a lot of money on the stock. So we need to see a little bit more time, in my opinion, and some support from enough buyers to get the 20-day moving average under the price and the 5-day above the 20-day. So that's what I see right now in this stock. Keep in mind, if it doesn't get the support, this stock could easily go lower. We just made a new low. This stock could easily turn around and make new lows down into, down this territory right about in here. In this time frame. So into September, you could be in the 40s in this stock if it doesn't get support. So I know it's contradictory, but that's what I see, my opinion, for entertainment purposes only. Let's go down and take a look and see what RBAM Research says on this stock today. We follow this stock. Today, as with most of the stocks that we follow today, we cover 190 stocks are out by 7 a.m. Monday through Friday. There's no entry price on this stock because it does not think the market's a good buy today on this stock and quite a few other stocks. You can see Twitter and Cisco right here. There's no entry price on them either, in Exxon, all these stocks. The algorithms, when it does not believe it's a good day to buy, it does not put up a buy signal. So the way this works, these come out every morning by 7 a.m. You can see this is for today. They're 1, 5, and 20-day holding periods. They're longs only. The way this works, if you were to buy today, assuming your own analysis said it was a good idea to do so, you could buy approximately around here and close out, worst case, the next trading day just before the close, take a loss, or take your profits as soon as you got them. So that's the way all these work. You consider these for entertainment purposes only. If your own analysis says it's a good price, you can buy in here, and then using your analysis, take your profits as soon as possible, as soon as you get them, or close out worst case at the 1, 5, or 20-day holding periods. That's the way these algorithms work. You can get them all for 190 stocks at rbamresearch.com, absolutely free, no credit card required. In addition to the stocks, we cover longs or shorts on forex, the major pairs, BTC crypto, and the most liquid futures contracts. Again, 7 a.m. Monday through Friday, they're updated at rbamresearch.com. There's a link in the description below. You just follow that link and sign up, absolutely free, no credit card required. If you like these videos, please hit the like button. If you want to subscribe to get some more, please do that. If you have a great comment to help us make these videos better, we'd love to hear it in the comment section below. Keep in mind, everything you've seen and heard on here, including the entry prices and my commentary, is for entertainment purposes only. Can't use it for anything other than entertainment. You have to do your own analysis, and you definitely trade at your own risk.